Vee Trades technical analysis course coming soon. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the SPDR S&P 500 ETF Trust with the ticker symbol SPY. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So what is going on in the markets? Well, it's just a lot of indecision. Buyers don't know what to do right now and sellers don't know what to do. So they're kind of just stuck figuring out what they should be doing, and the volatility looks like it's a little bit lower than previously. I believe we're going lower just for a little more reasons than being bullish, and I'll show you why. Looks like first I see that there was this horizontal line in play, a very strong support. We bounced from here several times. This is the first bounce. We got a couple bounces over here, then we got another third bounce, and then we had a breakout of this support level, but then we came back into the support level and found support, and then we continue higher. But now we're getting resistance because you can see this red bar was formed today. It got rejected from the EMA, and there's also a channel working lower. You can see that this is a nice fitting channel against the price action. If I drag it down, you can see that right where the bulls defended the 412 level is at the bottom of this channel, which is support, and it sent prices up to the resistance side of the channel. Just like what we got over here, it sent prices up to the resistance side of the channel. So are we going to get a repeat of what happened when we came back to the trend line? Well, that's a possibility. You can see that this is setting up for a nice little short. However, we could be having a red day tomorrow, break below this candle at the 433 level, and then reach the 429 level. But it's very dangerous to go short because this is a strong support line that we just got back above. So either this is going to be a massive short trap or a massive long trap. We'll have to wait and see. You can also notice that we were consolidating for 4 days before breaking out today. You can see that this orange channel is holding several bars inside of it, and today was a breakout on the top side, so that could lead to a breakout on the bottom side, and we are resistance of the channel and the EMA. And you can see that once we have a push up higher but we don't see any follow through, that could be a bearish sign. So we had this little channel working higher, just 2 bars, a break outside of it, a move to a new high, and now it looks like we could be reversing down. So there's more bearish signs than bullish, so that's why I'm leaning towards the bearish side. If we do continue lower, where can we go? That would be the first leg down in the market. This was the pullback, and now we could be in the formation of the second leg, and it's right at the $400 level that I've been talking about before. I'm not saying we're going to go lower. The measured move is at the $400 level, but you can see that price did come back to the 411 level, so that might be good enough. These 2 legs might be good enough. We had a pullback, a correction, and then the next pullback, so we don't have to get a perfect measure move to continue higher, but it's just something to pay attention to. So this measure move is right also at a big gap on the chart that has not been filled yet. You can see that the price tried to fill up the gap back here in May, but they failed, and then prices just continued higher. This is also at a breakout level. So there's multiple reasons why price should come back here, and they're trying very hard to drop the market, but bulls are defending the levels, and it's hard for them to bring the market down. So as of right now, I'm leaning more towards the bear side, but it's not a high probability to continue lower either. I'd say it's 60-40. I see more clues for the price to continue lower than continue higher as of right now. Obviously, if we do something like this where we had a push up just like we did right now, we came back and tested support, and then we went up, and now it looks like we're selling off. However, if we come back at that support line and we see buyers where we see a strong bullish candle, then that could be a short trap, and we can get something like that. Maybe not that severely, but you guys know what I'm talking about, because then that will be a double test of support where we just had a single test right over here. You can see the red candle came back down to support, and then we bounced, but now we got rejected from the resistance side of the trend line and the EMA. So again, just how price action works, it's not going to be the same, meaning it is dynamic. So again, if we bounce from support, then it's less bearish. So we're gonna have to wait and see. However, if we do, well, this is what actually happened right now. We had a breakout, we went up, we bounced from support, we went higher, we went barely past the previous high. So if we continue lower and break the support that was previously built, then it's off to the races for the downside. So that's my analysis for the SPY. We're gonna have to wait to see how many all the different candle bars that can form from now until we see these targets met. But this looks pretty bearish on the chart, and what the price action tells me as right now. It can change, but this is what I have to work with. I don't know what's going to happen on the right side of the chart. You have to just infer based on the clues on the chart, and the clues on the chart are pointing down. So that's my prediction. I think we can reach that $400 level. I think this would be a good time for the market to do it. I don't know why they wouldn't. I think they want to pull back the market to this $400 level. And if we don't, then we're probably going to just reach the all-time high and pass it, as I show you on the weekly chart and even the monthly chart. So here is the weekly chart for the SPY, and I'm going to show you the uptrend channel since 2020. It's a very long trend that we were inside of, so it's most likely not going to just reverse right now. There's no signs in the market that we are going to crash and have a recession. It just doesn't look like it. It's too early to tell. We'll have to wait and see. But as right now, I'm deciding if we're going to get the second leg down to the $400 level, or is this enough for the bulls to push the market higher. So you can see that we are finding support at this 430 level, and bulls are defending it. But again, there is resistance above, and there's still possibilities to continue lower. So if we do continue lower to the $400 level, it's still not over for the bulls. From here, I'm expecting a rally, basically a continuation of the uptrend, because this would be the first break outside the channel. And normally when we get a first break outside of a channel, we usually go back up to retest the previous extreme. So we could do something like this, and that would make sense. We'd probably get a new high and then continue much higher. So even though we can go lower, I'm not saying we're going to continue lower and lower after that. What I'm predicting is that I'm deciding if this is the end of the correction and we're going to continue higher, or we're going to correct a little bit more before continue higher. So that's my prediction. I don't think we're going to get to these low levels and just continue lower and lower. That's unlikely, very unlikely, but it is a possibility. Like I said, the price action can change, and then you will have to make a different analysis. But as of right now, it just doesn't see that. You can see that we had corrections previously in the past. So this is nothing different. This is just a bigger one than previously shown. And to put things into context, you can see back here in 2020, that was a harsh sell-off. It was a 35% drop from the highs to the bottom of that correction. And right now, we're not even close to that. You can see that from the highs. Let me clear the chart so you guys can see the price action more clear. So these are the highs right here at the 480 level, and the lows of this correction was at the 410 level. So that's only a 14 or 15% drop, and the previous time was a 35%. So even if we were to go to the $400 level, that's only a 16%, 17% drop. So it's not even that much. So again, this is nothing, just a normal correction. I'm just still deciding if this is a two-legged pullback, or we're just going to continue higher from here. As of right now, for the prices I see on the chart, it's telling me that it's probably going to be a two-legged pullback to the $400 level, and then from there we probably can continue higher. So let's wrap this up on the monthly chart. Not much on the monthly chart. The chart is no different than the daily and the weekly. It's just more summarized. You can see that I think the price wants to pull back to the EMA, just like what we did before. It doesn't like to be far away from the EMA for a while. EMA is this blue line, so we did come pretty close to it, so this might be close enough. However, it looks like we're not continuing higher, so they might want to come back a little bit more before seeing higher prices. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.